In this video, we will discuss how to answer a pricing question asked in McKinsey. So the question is, our client is a leading pharma company who has developed a breakthrough vaccine for a major tropical disease affecting millions in poorer countries. The CEO sees high commercial value in wealthy markets, but health groups are urging low cost access for affected regions. How would you design a pricing strategy? It's a long prompt, so we are going to quickly reiterate and make sure that all the important details have been captured. Okay, so on to the next step, which is to ask our clarifying questions. Please pause the video for 1 minute and think of all the clarifications that you want to get. So I will start by asking, what is our client's priority? See, it could be profit maximization, patient access, reputation, or is it a balance? So the interviewer tells us that the CEO wants profitability but fears backlash if access to low income countries is neglected. The next question that I'm going to ask is, what type of tropical disease are we talking about? So the interviewer tells us that we can think of something like, let's say, malaria, dengue, chickenpox, which are caused by infectious parasites. And then the third question is related to knowing more about the vaccine, like what is the manufacturing cost per dose, what is the R&D cost, what is the investment that went into it, what is the patent life. So the interviewer tells us that the cost is close to $8 per dose, and we have to take two doses, so it's $16 per course, and the R&D cost is close to 2 billion, and the patent is for 15 years. And the question also mentions about some health groups being involved. So I would like to know which health groups are these and what leverage do they have. So the interviewer tells us that it is WHO or the World Health Organization, which is pushing for cost pricing. And then the final question is like, which low income countries are most impacted and how many cases happen in general. So the interviewer tells us that it is close to 500 million annual cases across all these countries like Africa, South Asia, and Latin America. So let me know in the comment section if there are other clarifying questions that you would have asked. So, moving on, we'll quickly summarize what all we've discussed till now. So, our client is a pharma company who has developed a new vaccine for a tropical disease which is affecting close to 500 million people annually, primarily in the low income countries. And the company is now facing a critical dilemma, which is that the CEO's desire is for profitability and being able to recover the $2 billion R&D investment and to capture the high income markets, whereas there is intense pressure from the WHO and government to provide low cost access. So, the core challenge for us will be to formulate a pricing strategy which will navigate these competing priorities, that too within the 15-year patent window. I hope you are with me till here. So, let's quickly discuss how will we approach this problem. See, the way I'm going to look at this is, so on one side we have the CEO, and for the CEO we need to determine what will be that premium price point, because that will be the primary source of revenue to be able to recover the R&D cost from the high income countries. And then on the other side we also have all these global health organizations which want a low cost or a cost plus pricing model so that they can meet for all the high volume needs in the low income countries and to also satisfy all the humanitarian demands which are there. Okay, first thing that we need to do is to perform the market sizing and pricing analysis for the high income countries. The second is to develop again a pricing and a volume analysis for the low income countries, and then to finally give our recommendation to the client on how to implement the pricing strategy here. Let's start with our step one first. The way I'm thinking about this is, we'll have to identify who are our target segments in the high income country. For example, one could be all the travelers, like people who travel to these endemic regions, which could be for, let's say, tourism, any business work, and things like that. And then there could also be a military or government personnel, for example, the soldiers, diplomats, or any aid workers who are deployed to these tropical regions. Let me know if there are other target segments that you can think of here. Again, let's assume that for all these high income markets, we are looking for countries like United States, Europe, Japan. And always remember to check with the interviewer if you're on the same lines. So the population for the high income markets is close to 900 million. And that is something which I confirmed with the interviewer. And see, it's a good idea to know the population of some top countries and also the global population, because this comes in handy when you're doing some quick guesstimates. So let's say the first user segment, which is travelers, I'm assuming that 0.5% people will travel every year. So that gives me close to 4.5 million. And remember to always check with the interviewer if you're on the same page or not. Let's assume that the number of people who are opting for dose is close to 10% and the number of dose that they have to take is 2. So this gives us zero point 0.9 million. And the second use case, which is the government plus military, I'm assuming that 0.25% people will have such requirements every year. So this gives us 2.25 million. But here, see, almost 80% people will opt for the dose, because military and government personnel, since they will spend more time in that country and they are more prone to the disease, right? Hence, the opt in will be more. And again, the number of doses will be 2. So this comes out to be close to 3.6 million. This is where you've also showcased to the interviewer that you're thinking in deep, because other candidates, they might just combine everything in one and take a common opt-in percentage. But when you're breaking it down into two, you're showing that you are thinking more in depth. The total market size comes out to be 4.5 million. We know the market size, we have to determine in how much period do we want to break even. So we can ask the interviewer, and let's say the interviewer tells us that on the R&D cost, the break even that the CEO is looking for is 10 years. Now, one thing to also notice is that we are calculating the break even only on the R&D cost, and we're not considering the variable cost which will be there for each dose. While we are considering this for 1 year, because the break even will happen in 10 years, there can also be a growth that will happen every year. So let's assume that the market is growing at close to 5% every year for the next 10 years. For break even, the simple maths is revenue is equal to cost. So we'll do the 4.5 million into growth rate, which is 1.05 raised to the power 10, into the price that we need to determine. That will be equal to the $2 billion cost that we've incurred. So the price comes out to be close to $272 per dose. We can take like a price range of close to 250 to 300 for the high income market. So now we'll move on to step 2, which is the market sizing and pricing for the low income countries. We had clarified in the start that the population impacted in the low income countries is close to 500 million annually. See, here the market size won't be driven by the spending power, but it will be by the number of people who the government, or let's say the WHO, can afford to vaccinate. And here the way in which we can look at the market sizes, like they will also prioritize the specific population who are most at risk, because they can't go ahead and vaccinate the entire 500 million population all at once, right? Let's assume that the average lifespan is close to 80 years. So the number of people who will fall in the most at risk category, that can be children who are less than 10 years and people of age more than 60. And assuming that there's uniform distribution across all age groups, what we can do is we'll have 500 million into 30 by 80. So this gives me close to 18.75 million. And if I were to consider a 10-year commitment, then this comes out to be close to 18 million doses per year. And also remember that a person will have to take 2 doses. It is close to 9 million people vaccinated in 1 year. And just for ease, I have not considered any growth that's happening in the number of people who are being impacted. So I'm ignoring the growth factor for now. Just take a minute, pause the video, and try to look at the calculations and do it by yourself, which will make it easy for you to understand. Moving on to the cost side now, the cost for one dose is close to $8. So let's assume that our client can have a 25% margin. Then the price comes out to be $10 per dose. As we discussed, that the break even won't happen in this model, right? Because if we simply equate revenue is equal to cost, then our revenue comes out to be lesser via this approach. So now what are the options that we have, right? Because we need to decide which pricing strategy should we implement. So on one side, we have the pricing for the high income countries, which is close to 250 to $300 per dose. And then the other is the low income countries, which is close to $10 per dose. But what is it that we should go ahead with? So let's evaluate each of the scenarios one by one. First one is to opt in for like a single high price strategy, which is what the CEO wants to go ahead with, right? The price here, as we discussed, will be close to 250 to $300 per dose, and this is only for high income countries. The break even will definitely happen. So this is the niche and the high value segment which will generate significant revenue despite low volume, and this will also help the client in recovering the 2 billion upfront R&D investment that went into this. But the challenge is that the company might have to face severe reputational losses, or there could be political backlash as well, right? Now the second scenario is to go ahead with what is the WHO and the government's request, like a near cost strategy. So the price here will be close to $10 per dose, and this is a massive volume opportunity because this is more of like a public health need. This will provide broad access to all the people who are impacted in the low income countries. But the challenge is that the break even won't happen in 10 years, so the R&D cost recovery will be really minimal. And then talking about the third scenario, which is a tiered pricing strategy. So here we can do a pricing for high income countries as $250 and pricing for low income countries as again $10. And the break even will happen in less than 10 years. But the problem here is that it will become very difficult for the client to operationally handle it. And there could also be problems like arbitrage happening due to the difference in pricing. See, based on the analysis that we've done and the dilemma that's there, it seems like scenario three is the best option because it is balancing the CEO's desire for profitability and it is also meeting the demands of the health organizations. Other two scenarios seem too extreme. One is either not financially viable, and the other can lead to reputational issues. There are challenges with the tiered pricing strategy also. So let's see how we can solve for those. So before the interviewer asks you to discuss the challenges, if you call it out upfront, that's where you differentiate yourself from the other candidates. Because even in real life consulting, right, a strong consultant will always call out the risks and discuss the potential solutions upfront. And don't worry, we have a complete consulting course where we are teaching you how you can solve consulting cases like the top 1%. You can find the link in the description below. So, back to discussing the challenges and their solution. We are going ahead with the tiered pricing strategy, which is for low income countries, we go ahead with $10 per dose, and for the high income countries, it is close to $250 per dose. First challenge that can happen can be the risk of arbitrage, which is like the vaccines which are intended for the low price markets, they can be illegally diverted and sold in the high price market. The second could be that the overall complexity and the cost of implementing this, because now our client will have to either maintain two different supply chains, and this will also lead to a lot of cost that will go into this. And then there could be reputational risk and public scrutiny, even from the high income government, right? And there can be a pressure on the client to reduce the prices. So, how do we address each of these? See, talking about the first one, the client will have to establish a robust end to end tracking mechanism where they're doing a tracking from manufacturing facility to the final point of distribution. If they see that there is any diversion that's happening, then legal actions need to be taken. And the client can also create two separate SKUs, which can be, let's say, with different packaging, or something like a label saying for public health use only, which will be diverted to the low income countries. And this is a common strategy that a lot of other pharma companies also do. The second is to also do like a phased rollout. So here the client will start with a few most impacted low income economies and a single high income market to test the model before they do a global rollout. And they can also partner with, let's say, some established logistic providers and distributors who have presence and expertise in handling pharma products. And for the third one, it is important for the client to upfront develop a very transparent and proactive public relation approach before launching the vaccine. So maybe they can frame the narrative and position the tiered pricing, something like an access for all kind of initiative, right? And they need to actively keep engaging with the government stakeholders in the high income countries to explain the strategy and benefits and have their buy in. And one more thing that we can also do is if there are other pharma companies in the past who have adopted this kind of tiered pricing strategy, then we can read their strategies and help our client. So, we are at the end of this case. You can follow me on LinkedIn as I keep posting a lot of articles about consulting and business strategy. I hope you've learned something new in this video. I will meet you in the next one. Till then, keep learning and keep watching.